My name is Joe Pivarunas. I'm the founder and managing editor of Nanalyze, and today we're going to talk about why a Bitcoin crash may be imminent. Now, that title may sound a bit clickbait, but I think you'll agree at the end of this presentation that it's probably pretty fitting. And as Bitcoin holders ourselves, we became quite concerned when we learned about the situation that we're going to talk about today. Now, you may be surprised to find that things can erode as badly as what we're going to discuss today. And based on our historical experiences, this is not uncommon. So an example of that would be a company we covered back in January of 2016 or 2017 called Cannabis Science. The ticker was CBIS. The title of the article was Why Cannabis Science Should Scare You to Death. And when we published that piece, which was quite popular, we had a legion of cheerleaders coming around to condemn us. So the skin thickness of a promoter gets thinner as the more brazen their scheme is. So this scheme was very brazen, very obvious. So we filed a complaint with the SEC and didn't hear anything back aside from the confirmation that you can see on this slide. Just last year, Cannabis Science didn't file their financials, and the regulators suspended the stock from trading, and anybody that held stock now has worthless stock. So it just goes to show that regulators can't control everything. And that's where the old saying is, do your own due diligence, right? And another reason I think that things today are not focused on risk, is especially in the blockchain and cryptocurrency community, is that there's this peak of inflated expectations. So people don't want to know about red flags. There's so much money to make, so much opportunity, that they're only focused on generating alpha. And you can see here on Gartner's hype cycle that we're approaching the peak of inflated expectations for cryptocurrencies and blockchain, Web3, DAOs, all that. So before we get into today's story, we need to understand what a stablecoin is. And CB Insights put together this handy little chart that shows us a stablecoin is simply a cryptocurrency that's pegged to some external reference point. So you can see here they have one that's pegged to the US dollar or the Swiss franc. That's a fiat collateralized. You could have a cryptocurrency that's pegged to the price of gold, to a commodity. You could have one pegged to the price of another cryptocurrency, or you could have one pegged really to any sort of external reference point. And when it comes to the US dollar, the most popular stablecoin today is Tether. So the entire cryptocurrency infrastructure depends on Tether to function. So over half of all Bitcoin trades are against Tether. And the ticker symbol here is USDT. It's the most popular stablecoin based on market cap and 24-hour volume. And in fact, it's actually the fifth largest cryptocurrency that we're talking about here. You can see that it has a market cap. This was taken from Coinbase today. It has a market cap of $76 billion. That means that Tether issued 76 billion tokens in exchange for $76 billion. So the other thing to note here is how quickly this happened. And on this slide, you can see that the market capitalization of Tether rose dramatically in the summer of 2020 to early 2021. And if you can see the time frame at the bottom of this slide here, note where February 2021 is. That's right about, let's say, mid, when that spike that you see started. It's about in the middle of that spike. Well, around that same time, this press release was issued from the New York Attorney General, and it was talking about how a cryptocurrency exchange called Bitfinex, they're one of the largest cryptocurrency exchanges, or at least in the top 10, and Tether had deceived their clients and the market by overstating reserves. And what that meant is that Tether was telling their clients that the Tether coin was actually backed by US dollars when it wasn't. So that's a pretty big problem. And then another thing covered in this press release was how Tether and Bitfinex hid around $850 million in losses. And those losses relate to a Panamanian firm called Crypto Corp that according to sources, that was given $850 million without any sort of contract or anything, and then they promptly disappeared with the money. So the end result of this investigation was that Tether was fined $41 million. Now, when you have a firm that's been fined and accused of doing these particular activities, right, by the Attorney General, that should be a pretty big warning sign. Yet, as you saw in that previous slide, the growth of Tether continued. Now, more recently this fall, Bloomberg started asking questions, because if Tether has $76 billion in assets, that means they would be one of the 50 largest US banks. So people should have heard of them, and everybody should be familiar with them. But they're not a large US bank. They're an unregulated offshore entity with their assets in the Cayman Islands. So Bloomberg has started asking some questions. You can see some of their pieces here, investigative pieces around, has anyone seen Tether's billions of dollars? And then more recently, when Tether released an attestation that we're going to look at in a second about what they're holding, Bloomberg responded to say that fails to provide any color around their reserves, and it's all a big mystery. So what Tether released, this was just days ago, was what's called an attestation. This was issued by Moore Cayman, a firm in the Cayman Islands, not an independent auditor, but just a firm in the Cayman Islands. This is an attestation, and we're not lawyers, so we don't know the legal meaning behind that, but it's an affirmation that, in fact, Tether has these assets. Now, this is no consolation, because if you look at, and this was taken obviously when they had a $69 billion market cap, and you can see how their market cap continues to grow over time as they issue more coins in exchange for money that they put into these assets that you see. The big chunk of assets here is this $30 billion in commercial paper and certificates of deposit that they're holding, which they refuse to provide any color about. Now, if you're not familiar with commercial paper, it's a financial instrument, and we're not going to detail what that involves, but it involves somebody financing, let's say, accounts receivables for another firm. So it's typically very short-term duration debt. Now, commercial paper is hardly a low-risk asset, and you can see that in the implosion, was it earlier this year, of Greensill Capital. Now, Lex, I know Lex, he built his firm after working at Morgan Stanley and at Credit Suisse, and he built this trade finance product, and he built an entire firm around it, and it was very successful until it wasn't. So there's a lot of risk associated with commercial paper that isn't so obvious. Now, the additional detail that we're given about their commercial paper holdings are that they're all highly rated. You can see the ratings here. And when asked, they said that these ratings were given by multiple agencies. So take that for what it's worth. And the other bit that's interesting is the duration. So your average piece of commercial paper has a duration of about 30 days. The sweet spot is 90 days or under. That's what most firms want. Because as duration increases, interest rate increases, risk increases. And you can see that they're quite high duration. They're holding commercial paper that's pretty high duration. In fact, if a piece of commercial paper extends beyond 270 days, it needs to be securitized or considered a security by the US government. So clearly those are pieces of commercial paper that are not in the US. And when asked about the breakdown of where their commercial paper sits in terms of the geography, they haven't provided any color on that. And one big concern is they have a lot of exposure to Chinese commercial paper. And if you know anything about shadow banking in China, this is not a good place to be. So this interesting chart by CoinDesk shows us the rapid appreciation of Bitcoin's market cap, which coincides with the appreciation of Tether, which is seen here as USDT, that's the ticker, and then this bump in Chinese commercial paper. So people have been asking Tether, how much exposure do you have to China? And Tether doesn't talk much to the media, but they did this past summer. And Deirdre from CNBC interviewed the CTO of Tether, who brought with him his general counsel, as one does. And she held a very interesting interview with these gentlemen that is pretty much a train wreck. So they were very, very careful in what they said, and it made for quite the awkward exchange. So she would say, "Did you say that no one has ever had any issue redeeming Tether for US dollars?" And the counsel would say, "Well, that's exact." And then he would catch himself. "Well, we've never refused a redemption by a Tether customer." So that, he says, that's what I said. Very particular choice of words, very suspicious when somebody selects their words so carefully as if they were in a courtroom. So she did a great job of pressing them on these commercial paper questions. So when asked, she said, here at CNBC, we've asked around, and by the end of this year, Tether will probably be the world's largest holder of commercial paper. So why doesn't anybody know about you? Why hasn't anybody heard about you? Who do you work with? And they said, we don't disclose our commercial partners. And then when he was pressed again, he said, well, we're working with this bank in the Bahamas. Okay. And then when pressed on their exposure to China, the only thing they would say is they had international exposure. They wouldn't say anything about how much exposure they had to China, even when pressed multiple times. And then when she asked about who rates their commercial paper, they started to say S&P and then corrected themselves and said, well, multiple rating agencies. So very, very opaque and unwilling. They talk in this same conversation, the gentleman talks about how Tether is a leader in transparency, and it's almost comical. So you can watch that yourself, but the interview is full of red flags and concerns. Now, people in the cryptocurrency community have voiced their own concerns about this. For example, Vitalik Buterin, who's one of the co-founders of the second largest cryptocurrency out there, has referred to Tether as a ticking time bomb demon. And then there's this gentleman who writes about cryptocurrency, and I think he did a good job here of describing what a worst case scenario could look like if the cryptocurrency community isn't prepared for Tether's insolvency. And based on people's reaction to those who are sounding the alarm, they certainly are not prepared, nor are they willing to even admit there's a potential problem. And this could have exchanges halted, regulators could step in, banks could freeze Bitcoin deposits, prices can certainly plunge, and some dramatic action can happen, especially for people who are only accustomed to seeing assets go upwards. So there's a lot of concern about what this could potentially happen, and we've literally just scratched the surface today. There are a lot of people who've done a lot more research that we've looked at. For example, there was an academic study that looked at how the printing of Tether has been associated with the rise of Bitcoin, and that Bitcoin has been manipulated by Tether. And here's a chart by Mr. Whale that shows how whenever Tether is printing their tokens, that the price of Bitcoin rapidly appreciates. Now, we've covered enough red flags today where, going into the backgrounds of the founders and things like that, which other people have done, there's really no point in that because we have enough red flags to say there's a potential problem. Now, where are we at in terms of regulation? Well, the United States Senate sent this letter to the CEO, who never speaks to the media. And when CNBC asked them why, they said he's busy working. So this gentleman's very busy, and he never has time to speak to the media. But now he has a letter that needs to be answered. Now, in today's cryptocurrency testimony earlier this afternoon at the Senate, a senator had mentioned that Tether failed to show up in one case where they were asked to appear before the Senate. So they were given until December 3rd to respond to this letter, and it's hard to say what their response was, if they responded. And this gentleman here, the CEO, has certainly remained out of the public eye, which again is another red flag. So the takeaway here really is that there is some potential systemic risk. We're long Bitcoin. This is concerning, right? But it also serves to show people that there are a lot of problems out there, that this is a very immature technology. And one of the best ways to think about this is called the Blockchain Trilema. You have three attributes here that are very important. So decentralization, well, that's what blockchain is all about. It's decentralized already, right? So that's a inherent component of blockchain. But then you have the element of security. So if something's decentralized, then nobody's controlling the security. So they conflict. And then you have this element of scalability. Well, how can you secure something, make it very secure, and also have it scale very quickly? So in the case of with Tether, we see that it's failed miserably on the security side, or at least on the transparency side, regardless of what the company says. It's certainly scaled very fast, and it's certainly decentralized, and everybody's using it. Well, you could argue that Tether is kind of centralized with this firm in the Cayman Islands, but whatever firms they're working with, that they fail to say where all their assets are. But at any rate, blockchain technology, cryptocurrencies, there is some there, but it's early days and there's the potential for a lot of problems. So we just wanted to share with everybody our findings on that. Here's a plug for our premium subscription product. And we thank you, everybody, for joining us today. Our goal is always to make people better investors, teach them how to fish, teaching them to become better investors themselves without us having to tell them what to do. So we don't pick stocks. We don't tell people where to put their money or where not to put their money. We simply present our findings and let everybody else make their own decisions. So please subscribe to our YouTube channel. Thank you for joining us today, and we'll look forward to speaking with you again.